Hey guys, welcome back to the Independent Investor channel. My name is Ryan. It's so good to be with you again. On this particular channel, we talk about alternative investing strategies, ideas to empower one investor at a time, and the information that we offer on this particular channel, it's free of charge. When I first got into investing on my own, I didn't find out about independent investing by nature of research. Okay, I was referred to investing, and then was able to kind of, think about it for a second and research the topic on my own, and then kind of get my own ideas about how that could fit into my financial life. So, really, this is just a platform for me to offer up some ideas to you guys. So, with you have all the permission from me to plagiarize the information, take the information greedily for yourself, use it and employ some of these strategies in your own financial strategy. Or if you're looking to start up, take some of these fundamental strategies that I offer, research them for yourself, because I'm a concept-driven channel. Okay, I'm only going to offer information with the intent of helping people. That's it. Okay, I'm not going to get up here with bells and whistles. I'm not going to yell and scream at you. I don't think investing is one of those things that I can coach you to motivate you to want to invest. I don't think it works that way, because if I've coaxed you to do something, or I've encouraged you to do something that maybe you're not comfortable with doing yourself, then you're probably going to look for an exit strategy right away. Okay, and I don't want to end up giving information that people really haven't validated for themselves, to really understand why it is you invest. Okay, I understand why I invest. And a lot of this video is a culmination of a lot of experience I've had in the market. Over 25 years of investing, I've dealt with a lot of different scenarios, downturns in the market, and just to impart some of those strategies to you guys. So a lot of what you can do in your own investment strategies going forward can help, eliminate some of those mistakes that maybe I've made. Okay, and maybe get you a better head start in the game of finances. Maybe get you started a little bit earlier in the right program. Okay, so again, take this information, use it for what you will. We can even keep a little secret, and you don't even have to tell anybody that you got the information off of YouTube. This happens to be just the best platform for me to provide this information to a multitude of people. But it may not be, the most ideal place for somebody who's seeking out information. With that said, I only encourage you to look a little deeper at the concepts, right, and the fundamental strategies that I'm offering, and take some of those. You may not have known that you can trade stock in your individual account before watching my videos. And now you should know, because I repeat it in every video I have, because that's the single most important thing that you can do if you are an investor with $0 all the way up to about $50,000, is to become a passive investor within a Roth IRA. I think there's so many people out there that can benefit from finding out about this information, and just having the inner fortitude to start that account and get started just some way. And so in this particular video, I just want to talk about some of the biggest mistakes. I find that talking to people, and not only that, living a lot of these mistakes in my investment career, have rendered shortcomings, right? They put roadblocks in meeting your financial goals down the line. And if you can take some of these mistakes that I offer, and some of these mistakes that I find a lot of other people make, either knowingly or even unknowingly, or either by choice, they make these mistakes. If you can avoid some of these mistakes, you're going to end up so much better in the long run by just avoiding some of these mistakes. And it just takes discipline. It comes right down to financial discipline and removing emotion from your investment decisions going forward. All right. So the first one I have up here, I was just talking to a good friend of mine just yesterday. And the first question he asked, he's interested in investing, is, what if I lose money? Okay, and I don't just hear that from friends of mine. I hear this from people who are looking to get into the market. What if I lose money? Stock market investing is like gambling. All right, and that couldn't be further from the truth. And you guys have to understand, it's a fair question, but it's coming from a place of not having a lot of knowledge about the power of compounding interest, the power of tax shelter, the power of wealth preservation going forward, okay? And I can turn that question back in a lot of different ways and ask, okay, what is the cost of not investing, okay? Or what particular money are you not achieving by not investing, okay? And so those are some of the fair questions of, you know, what do I do if I lose money, all right? There's a lot of different strategies, defensive strategies that we can kind of put into place, but you have to understand that investing involves risk, okay? And the mistake that I find a lot of people make is that they enter into positions of investing with a false pretense that there's some sort of false sense of security there, especially when going with a financial institution, number one, okay? And that can be one of the biggest mistakes that you can make, because you'll find out that the programs that the financial institutions are going to put you in, right, are the exact same market exposures that you could seek out on your own, okay? So, you know, what if I lose money? Okay, one thing is for certain, that if you invest X amount of dollars into a savings account, you're going to have X amount of dollars in the future. You have a guaranteed net return for every dollar you invest, that you return that $1 back to yourself with no capital appreciation, no wealth preservation, okay? Really no need for tax shelter, okay? So if you enter into a 40-year investment window and you end up investing the maximum amount over that 40-year window towards your Roth IRA cap, that's going to render you $219,000 over that time frame, all right? So what if I lose money? Okay, it depends. Okay, that's usually the response I usually give people. Okay, because if you're happy with those guaranteed returns, just saving dollar for dollar, then maybe investing isn't for you. But you really need to understand that, comparatively speaking, over a comparable system over 40 years, investing in safe, diversified index funds or ETF funds, that same account minus fees can turn into $1.4 million. Okay, that's just mathematics. So you're talking about $1.2 million. All right, so I usually pose the question back to investors who ask that of me: what are you giving up by not investing? I don't think it's a fair question to say, what if I lose money? Okay, because when you do invest, markets are going to go up and they're going to go down, and it's really how you weather those storms and how you react to those market movements and even potentially take advantage of them that's really going to set yourself apart as an investor, as opposed to somebody who chooses not to invest. Okay, so the second thing, a big mistake that people think they can do, is time the market. And a lot of my videos are aimed toward investors just starting out. And investors just starting out that are trying to go from 0 to 1,000, a 0 to 10,000, or 0 to $50,000, you're a beginning investor, okay? And so to avoid or even minimize or significantly reduce the fees that exist just to buy those first assets, whether it be ETFs or index funds, all right, to minimize those fees, we want to introduce you to the market in a smart way, and to be able to introduce you to the market to becoming a passive investor. Okay, so you're going from a non-investor to a passive investor and allowing those dollars to compound until you can get up to those certain thresholds. And a lot of people will get their money in there, they'll see, you know, their money go up, and they'll want to sell right away, okay? And that can be some of the biggest mistakes. Furthermore, trying to time market downturns is probably one of the worst things you can do as well, because there's no guarantee that you're going to be able to tell when the market has actually hit a bottom or if it's at a market high, okay? Now, when you're buying assets, I strategically like to buy on a red day, okay? And I strategically like to sell, if in fact I do sell, on a green day. That means when the market is down and I'm dollar cost averaging every 2 weeks or every month, then I like to make my purchases on a red day. And I feel like that makes a huge difference over time if I'm constantly buying when the market is red. Now, if you do dividend reinvesting with a financial institution, they're going to set you up to buy on the 14th or the 16th of every month. And guess what, guys? That stock is going to buy whether or not it's in the green or the red. And just by some strategic maneuvering and monitoring of your accounts, you can put that money to work maybe a day or two early or maybe a day or two later. And that's some of just the strategic benefits you have as being an independent investor. The number 3 thing, stick and stay, make it pay. Sticking to a program, okay? I stress all the time about getting into the right account. If you can do that and you can get your money into a tax deferred vehicle and a vehicle that's going to give you diversification and wealth preservation going, guys, you can take your hands off the throttle. You can put this thing into autopilot and allow those dollars to grow dollar for dollar over time. And when you get to retirement age, guys, you're going to be so much more happy looking back over your life and saying, I'm so glad I did that, because you're going to be able to render those returns back to yourself at redemption age, or at least have the option to take those contributions either all at once or strategically pay yourself in retirement. It's your choice. All right. The second thing, the biggest mistake that people make is they don't start. And again, I mentioned at the beginning of the video, I can get up here and jump around and I can ring bells and I can yell and scream at you and try to motivate you, but that's really not what people who are looking to invest in really respond to. They don't respond to that. If they're really interested in the market, they're really going to take the information and they're going to research it and validate it on their own. Okay? But I find that a lot of people really have mental barriers insofar as to prohibit them from ever participating in the market, and that's okay too. Honestly, if you're going to be investing and you're going to be keeping yourself up at night because of your investments, because you have some sort of fear or internal barrier about not validating why you did what you did, or having some sort of buyer's remorse or remorse about the program then you're in, guys, it's not worth it. From a psychological perspective, money is just a small segment of your life. And if you do it right, you really don't have to pay a lot of attention to it at all. All you really have to do, there's some initial startup work that has to occur to get things started. But once it's started, guys, you can go on about your lives and be happy that you've got this segment of your life nailed down correctly. All right, so the second biggest mistake is that people just come up with whatever reason that they have to not start and not be open maybe to new ideas, or even looking at existing programs that they may have and just keeping the status quo, keeping those accounts the same because they have comfort or they have time and they have relationships built up with their planners, and they don't want to change. And that's every individual is different, and they're going to rationalize the information in different ways. But I find that's really the second biggest mistake that people make, quite frankly, is just not starting, because they're missing out on so much more going forward. And the number one thing that I mention on every video I make is choosing the wrong account. None of this matters if you put your account into, or you start your money into an account where you're going to start creating tax situations for yourself. If you're going to put your money into an account that over time is going to consume your profits for the benefit of a third party, okay, i.e. the financial industry. All right, and that's the big takeaway from my videos, is that if you can watch it, the number one takeaway is to try to safeguard money in a way to allow yourself eligibility down the line for tax shelter, and to allow those dollars, dollar for dollar, to wealth preserve going forward. All right, so that is the very number one takeaway. When you're watching investment information online, this is part of your cross-check, and it's always ask the same question: where did you invest your dollars in all these investment ideas that you have? And that's always one of the most important questions that I ask for you. Listen, thank you so much for tuning in. I hope you found the information viable. I hope you put it to good use in your own financial future. If you have somebody out there that can benefit from the information, please share the link. Please hit the subscribe button on the bottom of the video. Leave your comments at the bottom. If you have some particulars about your age and your investment goals, leave those at the bottom. I'm going to be reading through those comments and I will respond directly to you. Again, the information on the Independent Investor channel is free of charge. I'm not sending you a bill. All I ask is that potentially a little bit of support would be nice. And again, if you know somebody out there that is in need of this information, and I know they're out there, that's really one of the bottom reasons why I come out with these videos, is to help those people. May turn them on to investing where otherwise they may have never been turned on to investing. So thank you so much. Go ahead and hit the thumbs up button, and listen, good luck in your investment future.